if you didn't learn from a perma bear, for example, like I did, this is just a friendly reminder that last year is not the common place for the market, right? The market usually isn't in huge sell-offs overall. The market is naturally a bullish beast, right? It usually goes in a bullish trend to the upside longer term. That's the friendly reminder here, is overall we'll have these pullbacks, right? Notice that we had monthly exhaustion, so we needed a pullback, right? For those of you who do know me and had been following along with me from 2021, in October of 2021, we actually were getting flashes of red bars on the exhaustion on the awesome oscillator. And so that was our clue that we could be starting to reach the top of this current run, right? And that we would either start to chop and maybe have a year or two of consolidation, kind of like what we saw back in 2015, 2016, or we could be setting up for a stronger pullback. And then that's what happened, right? We definitely had a stronger pullback last year. It allowed momentum to reset towards that zero line. And now it's currently happening. Well, on the monthly chart, momentum bars are slowly starting to build back up. Look how much room it has until the top of the axis. That is a great sign for bulls longer term if we can keep up this strength. Another bullish signal, the compound breakout tool, right? That is giving us a nice bullish trend signal. The last time we got a bullish trend signal like this really setting up was towards the end of the COVID lows going into 2021 and throughout that year until we reached the recent tops and highs that we had. We also have a squeeze setting up. Now, like I mentioned, a squeeze can sometimes mean that there's a greater energy behind a move, whether it's to the upside or downside. So with that energy building up after this pullback, with the bullish sentiment that we have down here, and then with the 10-period simple starting to roll back up, it's getting ready to cross above the 30. All of this is really good sign for the bulls that the market is attempting to get back into that bullish trend. Now, there are still some hurdles, of course. Notice the Bollinger Bands. Those are the blue lines. Those are relatively flat. We want to see those start to flare open like they usually do in bullish trends to mean that we're actually getting going longer term to the upside. We do have, of course, the prior highs that could act as a slight resistance level. And then above that, we have the ATR trailing stop acting as resistance. Now, if we can break the ATR trailing stop, which is a ways on the monthly chart, don't get me wrong, but if we can break above the ATR trailing stop and turn it into support, that is, especially on a longer time frame, like a weekly time frame or higher, that is usually a longer term bullish trend signal. You can see back here when we broke above it at the end of 2020, it allowed for that full run in 2021. The last time we were even printing resistance prior to that was back over here after the housing crisis happened, right? In 2008, we saw the housing bubble burst. Everything fell down there. We switched to resistance on the ATR trailing stop. That's that dotted red and blue line. And then we started to break above it, right? And that happened in about 2010. And then what happened? We were in a bullish run all the way until COVID popped off. So if you start to see this signal switch from resistance into support, it is a good sign that long term, we are going back into that bullish trend again. So it already is looking good from our other indicators, but we do still want to be a little mindful that if we get up here and stall, there might be some chop, is my opinion at least. There might be some chop left in the market, kind of like what happened, like I said, in 2015, 2016, where it paused a bit, momentum reset, and then we got that next run to the upside. Otherwise, though, everything is really starting to look bullish. And for those of you who have been trading a while like I have, or certainly maybe longer than me, you might be telling me, well, Allison, when we get back to those all-time highs, like how are we able to break higher, right? There's just no way that we can potentially go past them. And I've heard that story before. And it's the reason why I bring up this NDX quarterly chart, because I cannot tell you how much I heard back in 2014, 2015, when we did start to enter that chop, that there's no way we can move higher. And the reason why other traders, even the bigger hedge funds, right, Jim Cramer, why everyone else was saying there's no possibility we can really continue higher, is because at the time we were on the NDX, the highs of the dot-com bubble. So for those of you who remember all the way back in the 90s, right, a long time ago, we had that huge run up in tech stocks. Everyone was buying everything. And then, of course, they didn't quite understand, what the value is, at least at the time, of these tech companies. They got overvalued, and then boom, right? The bubble burst and we got that pullback. And so when we finally got going in the NDX, for example, and got back into those highs, you could go back in time and look at the news reports. Everybody was like, there is no way we can move higher, right? There's absolutely no way. And if you were of that mindset, it was pretty easy to get talked into buying puts at that level, right? Because in your brain, you're like, okay, we're at the highs. There's no way we can go higher. Everybody who has supposedly been doing this longer than I have knows better. And therefore, we're probably going to reverse down. But what happened? Well, all we did was consolidated, right? We just consolidated a bit. Didn't even consolidate for that long, arguably, just had a mini pullback. And then what happened? We made a higher high. And then we made another higher high. And then it just kept going. So a friendly reminder for those of you who might be stuck in that perma-bear mind frame from last year, right? Maybe you were like me and you made some good money to the downside. Please don't keep that as your main mindset. And the reason why is the struggle that bears have, right? Perma bears have in the market is they want to stay on the bearish side. They have a hard time flipping off that bear signal and going back into a bullish signal because of, the volatility and the money that they made off of that pullback. But if you can't switch off that signal, then oftentimes what perma bears find themselves in, right? The situation they find themselves in is they lose all their profits that they made on this pullback on the run back to the upside. And it only takes a penny to make a new all-time higher high, right? Good reminder there. And so that's the reason why I pulled up this NDX chart, is because this purple horizontal line is basically representing the highs that we had on the dot-com bubble and where they leaded into 2015, 2016. And you can see there was no strong pullback, right? There is no strong selling that occurred. There was no other bubble that popped during that time. We just stalled, built up our energy again, and then continued on that bullish trend higher. So it's a friendly reminder for when we get up to these levels. It doesn't mean we can't stall and consolidate, right? But don't automatically assume or get talked into that there has to be this huge bearish outcome. Now, of course, if some event comes out, right, that causes us to pull back or anything like that, we'll be ready for it off the technicals. What we'll be looking for is a break of support levels, right? We'll look for the bearish signal on the compound breakout tool, or we'll look for momentum to start to really pull back. There are clues when we start to go into that bearish trend again. But until those signals actually start to show up, don't automatically assume that that has to happen, because that is a great way for people to over leverage in their account on puts and then miss the entire opportunity to continue with the bullish trend to the upside.
Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.